Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening with the Russian ruble. If you've been following the channel, you'll know that the value of the ruble has fallen significantly over the course of the last 12 months. And on two separate occasions recently, it breached the 100 level against the US dollar, which meant that one Russian ruble was worth less than 1 US cent. And that level appears to be the absolute limit that President Putin is prepared to accept the ruble falling to. And he told the Central Bank of Russia to do something about it, and they immediately organised an emergency meeting and increased interest rates by 350 basis points. And at the time, they cited inflation as being the reason for doing that. However, as we've talked about in previous videos, inflation in Russia at that time in August actually was relatively low. So that story didn't really make sense. Now, the increase in interest rates didn't actually solve the problem. And over the course of the last couple of weeks, we've seen the value of the ruble coming back down again. And it breached the 100 level again recently. And as a result of that, President Putin has now signed a new decree, so introduced a new law, which restricts certain exporting companies in Russia from being able to use their international currency. So basically, this is the reintroduction of capital controls to manipulate the price of the ruble. And this was something that Russia did immediately following their invasion of Ukraine. A whole host of different capital controls were introduced, which limited both companies and individuals from being able to access their international currency. And as soon as those capital controls were lifted, we saw the value of the ruble starting to tumble. And the head of the Russian central bank, ELVIRA NABIULLINA, recently came out and stated that she does not see capital controls as being an effective measure for the Russian economy. So in today's video, I'll have a look at the details of the decree that President Putin has issued. We'll look at what's been going on with the value of the ruble. We'll then talk about the potential impact of this decree on the companies that this is restricting, because the downside of introducing controls is that it limits what your companies are able to do and therefore potentially restricts their profitability, and so therefore could be negative for the long-term growth of the Russian economy. We'll have a look at what the head of the Russian bank has been saying about capital controls and look at what's been going on with interest rates, because there's another meeting of the Russian central bank on the 27th of October, and it's likely that rates will be increased again. We'll then touch on what's happening with inflation, because that's starting to become a problem for the Russian economy. And then finally today I'll wrap up with my summary as to what I think the implications of introducing these capital controls will be for the Russian economy and what's likely to happen over the course of the next 3 to 6 months. But before we get into all of that, once again, I'd like to say thank you so much for the great comments you've been posting recently. Please keep those coming. And if you'd like to see more face-to-face videos like this, including ones that I'm not posting on YouTube, and be able to avoid all of the ads, then please check out my Patreon channel. However, if you don't like Patreon and you'd still like to support the channel, please have a look below where you'll find links to buymeacoffee.com, as well as YouTube's Super Thanks and membership scheme. On Wednesday the 11th of October, President Putin signed a decree mandating the reintroduction of capital controls for an undisclosed list of 43 exporting firms. The controls will last for 6 months, and Russia has not published the list of which companies these measures will apply to. However, they are companies in the fuel, energy, metal, chemical, timber and grain industries. Starting from October the 16th, certain Russian exporters, within 60 days from the moment of receiving funds, are obliged to credit their accounts in Russian banks with no less than 80% of all foreign currency received in accordance with the conditions of their export contracts. They are also required within 2 weeks to sell on the country's domestic market no less than 90% of foreign currency revenues credited to their accounts at Russian banks, but not less than 50% of funds received in accordance with each export contract within no more than 30 days of receipt. So basically what this new law says is that the companies affected have to deposit at least 80% of all of the foreign currency that they receive and then sell 90% of that foreign currency. So basically they're forced to sell around 75% of all of their foreign currency earnings. And then just to make sure these companies are not doing something clever to try to avoid depositing this money, there is a catch-all that says that they have to deposit at least 50% of all of the funds received in accordance with each export contract. President Putin believes that this will solve the problems with the ruble and stated, "There are reasons to believe that the ruble rate is fluctuating because foreign currency earnings are not being returned in sufficient volume to mobilise the money supply on the domestic market. We understand the possible threats associated with the movement of capital." which basically means that President Putin believes that the problems with the ruble are not associated to what's happening with the Russian economy, but rather are down to the fact that exporting companies are not bringing capital back into Russia. Yevgeny Kogan, a professor at Russia's Higher School of Economics, said the controls should help strengthen the ruble, which he added was especially important as interest rate hikes only impact the ruble with a 5 to 7 month lag. So the measure, although not best from an economic point of view, is probably vitally necessary today. Today the ruble will strengthen, and by the end of this year we will see the ruble at 88 to 92, he said. However, he went on to warn that by 25-26, businesses should form plans based on a ruble rate of between 100 and 105. Russia's first Deputy Prime Minister, Andrei Belousov, said the main purpose of these measures is to create long-term conditions for increasing the transparency and predictability of the FX market, reducing the opportunity for currency speculation. However, Peter Mattis, senior FX analyst at InTouch Capital Markets, said the ruble is even less tradable for foreign investors after Russia reimposed some capital controls. This decision can be interpreted, at least by some market participants, as a sign of despair to stabilise the ruble. Everything depends on how rigidly and effectively the controls are implemented. In September, ELVIRA NABIULLINA, the governor of Russia's central bank, spoke out against the reintroduction of currency controls after hiking interest rates to 13%, warning that such steps were inefficient and ultimately would be circumvented. She said the bank preferred economic measures, such as increasing the attractiveness of ruble savings or creating incentives for companies to sell revenues rather than administrative ones. Administrative restrictions, if they are effective, then they are usually effective only for a limited time, she said. The longer they last, the less effective they are. If we try to close more and more loopholes, for example limiting transfers abroad, then these ineffective restrictions will snowball. We close one thing, then business will find a new way round. Similarly, she said, repatriating FX revenues from foreign banks to Russian ones would have no impact on the ruble rate. Interestingly, at that time, President Putin said that exporters' restrained return of foreign currency was putting the ruble under pressure, but promised no sudden moves, such as the return to capital controls. Following the introduction of the capital controls, NABIULLINA said that there were no contradictions between her position and that of the president, and that the targeted nature of the restrictions would be important. She said the measures were temporary and that their effectiveness would be monitored. This chart shows the movement in the Russian ruble over the course of the last 5 years, and the reason that I've got it over this period is that I wanted to show the effectiveness of the capital controls that were brought in immediately following the invasion of Ukraine. In early February 2022, $1 was trading for around 75 Russian rubles. However, as soon as the invasion started on the 24th of February, the value of the ruble cratered, and at one point $1 was trading for more than 120 rubles. However, the Russian bank then introduced a raft of capital controls and also undertook a policy of buying rubles in the international market. And as you can see, there was a dramatic turnaround in the value of the ruble. And by the middle of June, $1 was trading for 50 Russian rubles, which was actually the strongest rate that the ruble had traded at for more than 7 years. Russia maintained their capital control measures until around November 2022, and you can see from this chart that as those measures were released and the ruble moved back towards a free market float, the value deteriorated significantly. And over the course of the last 12 months, the value has fallen from around 60 rubles to $1 to the current level of just under 98. Which represents a fall in value over the last 12 months of around 63%. Now, if we zoom in on the scale of this chart, you can see that in the middle of August, the value of the ruble started to deteriorate rapidly, and at one point breached the 100 level against the US dollar. And at that stage, under the direct instructions of President Putin, the Russian central bank organised an emergency meeting and increased interest rates by 3.5%. And that did have an immediate positive impact on the value of the ruble, which came back down to around 94 to $1. However, that rapid increase in interest rates wasn't a long-term solution. And as you can see, over the course of the last couple of months, the value of the ruble started to deteriorate again. And by the start of October, it had once again breached that 100 level, despite the fact that the Russian central bank had introduced another interest rate increase during that period. And right at the end of this chart, you can see the impact of the introduction of the latest capital controls. It has improved the value of the ruble. But the big question is whether or not this will prove to be a long-term solution or if it turns out to be another short-term measure. This chart shows the movement in the official rate of interest in Russia dating back to the start of 2022. And as we've discussed previously, immediately following the war, Russia hiked its interest rate to 20%. However, it then reduced that rate rapidly back down to a level of 7.5%, which was actually lower than interest rates were at before the war started, which seemed to be quite a bizarre move. However, the key period that I'm looking to focus in on this discussion is what's happened over the course of the last couple of months. In July, the Russian central bank increased interest rates by 1% from 7.5 to 8.5%. They then introduced the emergency 3.5% increase in the middle of August to take rates to 12%. And at the end of September, we had a further increase of 1% to take it to the current level of 13%. So within the last 2 months, interest rates have increased by 5.5%. From 7.5 to 13%. That is an extremely aggressive approach that the Russian central bank has taken. And if we look at this chart, which plots what's been happening with inflation over the last 12 months, now as we've just talked about, at the end of July, Russia introduced an interest rate increase of 1% in order to tackle inflation. Now at that point in time, the official rate of inflation was 3.3%, which is actually below the Russian central bank's target of 4%. So increasing interest rates by 1% at that point didn't really make any sense in terms of tackling inflation. So it tells us that it's likely that the reason that interest rates were increased at that point was to try to improve the value of the ruble. And in terms of the emergency increase in interest rates of 3.5% that was announced in the middle of August, the official inflation figure at that point was 4.3%, so just above the target level. So what this tells us is that the movements in interest rates are focused entirely on trying to support the value of the ruble and not what's happening with inflation. But interestingly, when you look at what's been happening with inflation, it's increased in every one of the last 4 months. It rose from 2.5% in May to 3.3% in June, 4.3% in July, 5.2% in August, and 6% in September. So what this tells us is that the increases in interest rates are not having the desired effect in terms of reducing demand in Russia and therefore bringing spending down and therefore bringing prices down. It's having virtually no impact. So that means that there's either a complete disconnect between interest rates and inflation in Russia, or alternatively there's still a question mark over how Russia managed to reduce its rate of inflation from 11% in February to 3.5% in March. So what's the summary and conclusion today? Well, I wanted to post this video firstly to give you an update as to what's happening with the Russian ruble, because the value has been moving around a lot over the course of the last few weeks, and I think it's good to understand why that's happening. As we've discussed previously on the channel, the generally accepted principle with regards to currency is that there is a link to your economy. If your economy is growing and performing well, then generally speaking, the value of your currency will be strong. However, if your economy is struggling, then that can be reflected in a weak currency. And President Putin is very aware of that fact. He wants the ruble to be doing well in the international markets. And actually, immediately following Russia's invasion of Ukraine, when the ruble recovered in value strongly, that was put forward as one of the arguments as to why Russia wasn't suffering as a result of the sanctions, that it was independently strong and that it would survive. However, as we've discussed in today's video, one of the reasons why the ruble did recover so quickly was because Russia introduced a whole host of capital controls. They effectively manipulated the value to bring it back up. But manipulating the value of your currency tends to be expensive, because your central bank will have to go into the market and buy your currency, and also it can restrict the long-term prospects for business. So ultimately Russia released all of its capital controls, and since that point we've seen a huge deterioration in the value of the ruble. But what we've seen over the last few months is that the 100 level against the dollar appears to be the breaking point from President Putin's point of view. He doesn't want to see the ruble going into triple figures in terms of its exchange rate. Now, the head of the central bank has made her position very clear. She doesn't like capital controls. So President Putin gave her the opportunity to sort out what was happening to the ruble in August. The Russian central bank did the only thing that was realistically available to it by increasing interest rates by 3.5%. And we did see an initial improvement in the value of the ruble. However, increasing interest rates tends to reduce demand in your own economy. The main reason that banks tend to do it is to bring inflation back under control, because increasing interest rates increases the cost of borrowing, discourages people from spending, which should bring down prices. But discouraging spending obviously reduces the amount of capital that's circulating in your economy. So long term isn't good if you're wanting to grow the economy and bring your GDP back up. And what we've seen over the last couple of months is that the value of the ruble started to fall again because the increase in interest rates didn't attract in any overseas investment, because a lot of the countries that were previously investing in Russia, such as the USA and the countries from Europe, don't want to invest anymore because of what's happening in Ukraine. And as a direct result of the fact that the ruble once again breached the 100 level, President Putin has now introduced a decree which restricts what exporters in Russia are able to do with their foreign currency. They now have to deposit 80% of all their foreign currency earnings in Russian banks, and then they have to sell 90% of that. So basically what this decree is saying is that they need to sell around 75% of all of their foreign currency earnings. And that's actually bad news for those companies for multiple reasons. Firstly, they're having to convert all of their revenue into rubles. Now, by definition, Russian exporters are dealing in the international markets. They're dealing with overseas companies, and it's highly likely that they'll have a lot of expenses and costs that are being billed in overseas currencies. So the fact that these companies are having to sell 75% of all of their foreign currency earnings could cause a major problem and leave them short of currency to be able to pay their costs. In addition to that, because of the long-term fall in the value of the ruble, it's likely that employees of these Russian firms will want to be paid in other currencies. Because if you're being paid in rubles and the value of the ruble is falling constantly, that means that all of your earnings and your savings are going down in terms of their purchasing power. So being forced to sell the majority of its currency could cause a problem with regards to staff. And also from these companies' point of view, if they're now having to hold all of their earnings in rubles, these companies will also be experiencing a fall in the value of their cash that's sitting on their balance sheet. The head of the Russian central bank said that they could buy back the currency in the future, and as a result of that, she doesn't see these controls being effective in the long term. But these companies won't want to keep having to buy back the currency at a higher rate, because it just means that they'll be losing value constantly. They're selling at one rate, buying back at a higher rate, and losing money on that transaction. So in terms of the overall impact, in the first couple of days following the introduction of this decree, we have seen a strengthening of the ruble, which is exactly what we saw when interest rates went up. So this could potentially just be a short-term gain. But President Putin has achieved his objective. But if you look at the long-term implications, it looks negative from Russia's point of view, because what they've done is effectively clipped the wings of a lot of their exporters. The restrictions that have been brought in against these companies are likely to reduce their effectiveness in terms of international trade and will reduce their profitability, which will be negative in the long term in terms of the growth of the Russian economy. And the fundamental problem that we've been talking about over the course of the last 18 months is what's going on in the Russian economy. That's ultimately why the ruble has been falling in value, because the economy has been shrinking, Russia has been making less profit, there are less people that want to deal with Russia, there are therefore less buyers of Russian rubles in terms of international trade. They are the underlying reasons why the ruble is falling. You can manipulate the price to a certain extent for a short period of time by introducing measures such as these capital controls. But in the long term, the market will tell you what the value of a product should be. And currency is a product just like any other. And the fact that the ruble has fallen in value so significantly over the last 12 months is linked to what's happening in the Russian economy. It's nothing to do with what's happening with interest rates in Russia or market manipulation or any of those sort of things. This is fundamentally because the Russian economy is far weaker today than it was before Russia invaded Ukraine. So introducing capital controls will have the desired effect for a limited period of time, but in the long term it will be detrimental to the growth of the Russian economy. And that's the reason why the head of the Russian bank was against this policy. So hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.